What is the difference between startup costs and organizational costs for taxes? Imagine you're about to launch a new business and wondering where to start with your expenses. Knowing the difference between startup costs and organizational costs can save you money and keep you on the right side of the IRS. Let's break it down in simple terms. Startup costs are the expenses you pay before your business officially opens its doors. Think about things like market research, advertising to attract customers, or paying for training your staff. These costs are all about preparing your business to operate. For example, if you hire a consultant to help plan your business or buy supplies to test your product, those are startup costs. They are considered capital expenses, which means you can't deduct the full amount right away. Instead, you can deduct up to $5,000 in the first year, as long as your total startup costs do not go over $50,000. If your costs are more than $50,000, the deduction reduces dollar for dollar. Any remaining costs are spread out evenly over 15 years, starting from the month your business begins. Organizational costs are different. These are expenses directly related to legally creating your business. For example, if you from a corporation or a limited liability company, you might pay legal fees to draft your articles of incorporation or partnership agreements. You also pay filing fees with the state and sometimes pay an accountant to help set up your books. These costs are also capital expenses and are treated separately from startup costs. Similar to startup costs, you can deduct up to $5,000 in the first year, with the same phase-out rules if your costs go over the limit. Any extra organizational costs are also spread out over 15 years. It's important to keep detailed records of all these expenses and separate them clearly. For example, if you pay legal fees to create your business, those are organizational costs. If you pay for advertising before opening, those are startup costs. This way, you can maximize your deductions and stay compliant with IRS rules. For Asian American entrepreneurs starting new ventures, understanding these differences helps avoid costly mistakes and ensures you take full advantage of available tax benefits. If you're unsure about how to classify an expense, consulting a tax professional familiar with small business needs is always a smart move.